And it's time to do Friday business. This business will take us 55 minutes right here on Business Incorporated. And here's what we have prepared for you. The United States is interested in expanding rail projects on the continent. The new development bank is giving out loans. Find out what it's for. And Green Park in Egypt is their focus. They have a target. You're welcome to the program. I'm Ini John Mekwa, and this is Business Incorporated. Start from the global space as usual. Oil prices inched up higher on Friday as investors weighed supply concerns in the Middle East, although signs of weakened demand limited gains. Look at the number now we see, and we have to tell you that, of course, October delivery, October contract is about to be expires today. So after today, it will be November contracts we'll be reporting. So Brent is at $80.17 a barrel. It's up 0.3%, while WTI is $76.09 after it gained 0.2. The focus or major driver of oil prices at this time is in Libya, because the oil production there of about 700,000 barrels per day has been offline since Thursday, and exports have halted on several ports following that standoff between two rival political factions, especially concerning the control of the central bank. Meanwhile, Iraqi supplies are also expected to shrink after the country's output surpassed its OPEC plus quota. Iraq plans to reduce its oil output to between 3.85 million and 3.9 million barrels per day from September. We're still staying in the oil and gas space, but here in Nigeria, the NNPC is asking for private partnership on the Nigerian National Petroleum Company Limited. Says it is seeking to engage reputable and credible operations and maintenance companies to operate and maintain the Warri and Refining and Petrochemical Company and the Kaduna Refining and Petrochemical Company. Well, this is on their handle right there, NNPCL. The goal, they say, is to ensure reliable and sustainable operations to meet the nation's fuel supply and energy security obligations. The tender process for selecting these companies, they say, will be a three-stage process: expression of interests, EOI, technical evaluation, and commercial evaluation. Let's leave the oil space now and go to metals. Start from gold. Prices gained on Thursday, fueled by strong expectations of a Federal Reserve rate cut in September, which is just a couple of days away, with investors focusing on U.S. inflation data. Let's look at the numbers right now. Spot gold is up almost 1%, 0.91%, $2,525.12 per ounce. And U.S. gold is also up. That's 0.82%. Up $2,558.60. Spot silver is also up more than 1%, $29.27. Platinum is up $994.65 after it gained 1.6%. Palladium looking even more green there, 3.3% up at $977 per ounce. And we know that traders see a 65.5% chance of a 25 basis points rate cut in September and 34.5% probability of a bigger 50 basis point reduction. Investors are now looking at personal consumption numbers, expenditures, and the Fed's preferred measure of inflation right there. So in a couple of days, I guess we would know what exactly the Fed will do. Now, here in Nigeria, Ms. Nneka Iwereji has been appointed as the new Managing Director and Chief Executive Officer for Ctibank Nigeria Limited, effective August 19, 2024. This follows the approval of the Central Bank of Nigeria. Iwereji succeeds Ireti Samuel Ogu, who has retired from Ctibank after 36 years of service. Prior to her appointment, Iwereji was Citi's head of global network banking across Sub-Sahara subcluster, and she led the team in achieving record business growth amidst considerable market complexities. Her previous roles include GNB co-head for Middle East and Africa, Africa Trade Services head, and financial institutions Sub-Sahara Africa Trade head. Iwereji brings a wealth of experience, and her 31-year banking career spans markets, corporate and investment banking, transaction services, risk management and operations. And she's been an executive director on the Citi Nigeria board and has also served on different boards in non-executive capacity. Chinese lenders have approved loans worth $4.61 billion to Africa, and that was in 2023. That makes it the first annual increase since 2016. According to the report, China extended approximately $10 billion in loans to African nations over the past year, a marked increase from previous years where lending had been in decline. The loans are reported to be directed towards various infrastructure projects, including transportation, network, energy facility, and telecommunications. This aligns with China's long-standing focus on development projects as part of its Belt and Road Initiative, which aims to enhance global trade routes and economic connectivity. Now, Growth and Development Limited, GDL, they've introduced a rent-to-own program, House Money, that's what it's called, and it's aimed at helping Nigerians own their homes, and it's through a combination of equity and home finance funding within a maximum of 15 years. The product, which was unveiled in Lagos, is considered a bold intervention in home ownership financing, representing the company's vision of creating wealth and transforming society.
Lack of affordable housing options for low and middle income earners remains a major factor driving Nigeria's housing deficit.
This is a global scheme and the rest of the world will catch up with this very soon.
But with the introduction of House Money, Growth and Development Limited seeks to potentially address this and other limiting factors.
Plus, for the House Money scheme, this is just about to make your home ownership dreams a reality.
House Money is a rent-to-own ownership plan designed to empower account holders to acquire homes at a single-digit cost of funds, when subscribers pay a fixed amount monthly.
We have two basic variants. We have GDL House Money Classic. Those are people who work in large standard organizations, you understand? And they are people who can conveniently drop as minimum amount is 80,000 naira on a monthly basis. And then we have another variant that is House Money Community. And what we are saying is that between 10 and 25 of you can come together and to say, look, we want to live together in an estate. You contribute for 2 years. After 2 years, GDL will start constructing your community.
We are set to make a major contribution.
The executive vice chairman at GDL, Kola Ayeye, explains that the company is guided by its philosophy of effecting social impact through the deployment of capital for shared prosperity.
It's important that we make money, and we make money. But in order to making money, we think impact is important. And what, for financial institutions, the most important way financial institutions can make impact is by deploying capital for shared prosperity. And you cannot deploy capital for shared prosperity until you make it possible for a lot of people to access affordable money to own their own homes.
Stakeholders also regard GDL Home Financing Solution as a positive response to housing crisis in Nigeria.
Before I came here, we did a very, very strict analysis, a thorough synthesis of what this organization is all about, what the policy is all about, and we will be very, very, very happy to partner with them because we believe that it's a product that has integrity and that has sustainability as well.
GDL is a non-bank diversified financial institution which has been operating for over a decade. The company says its mission of providing financial solutions to strengthen and expand the middle class has guided its values and led to unique product offerings providing economic value and returns for clients.
Now, the 3.32% reduction of currency outside the bank, alongside the tapering of inflation and growing GDP, which last we saw at 3.19%, are signals that the President Bola Tinubu initiated reforms are bearing fruits. And this, although there are some threats, and that is debt, that it's a real threat and may lessen the benefits. Now, this is the view of the Chief Executive Officer of the CFG Advisory, Mr. Tilewa Adebajo. He shared this view during Business Morning today.
The debt profile is now close to 121 trillion naira. which is a record high. And the debt, the cost of servicing that debt this year alone is close to 8.5 trillion naira. So clearly you can see that we can no longer continue to go in this direction. So I think it's long overdue that we begin to take a look at all these things, because if we do not address these issues right now and head on, then it can stall the reform program and it can begin to cause problems for us, by this time next year. So it's very important that government takes some drastic steps. We still have the capacity to borrow, but at the end of the day, when that capacity stops, what are you going to do? So that is why it's important for us to begin to sell down some critical assets now and raise money to ease this debt burden.
That was a conversation earlier today on Business Money. Let's take a break now. When we come back, we'll head to the market and other segments of the program awaits you. Welcome back to Business Incorporated right here on Channels Television, and it's time to do the markets. And of course, we begin from Nigeria and Africa. I think we do have there that it's a sustained recovery from about 24 hours ago for the NGX. It's up 0.14% at 96,000. You can see we're building on that 96,000. So even though we had 96,000 yesterday, I think it was about 200. 300. So now we have 500 there, building strong on that, and hopefully that will be sustained. While JSE of South Africa is in the red, 0.30%. That's intraday 83,984.25. Let's stay on Nigeria for a bit now with Nonso Ejiofor. He is a fixed income dealer with Access Bank. Hi, Nonso. Good afternoon and welcome to the program.
Good afternoon.
Yeah, so let's head to the fixed income space. And I think the most prominent story today at the fixed income space is today is a subscription for the first domestic USD bonds of the federal government of Nigeria closes. What have you noticed in this period of subscription?
Okay, thank you for having me. So it is worthy to note that the interest from investors has really been good. The interest from traders has also been good. The bond offers a coupon of 9.75%, which is actually a very good return compared to other instruments which we have seen in the market. And that offers investors an adequate yield for an adequate return for their investment. And also the flexibility which this instrument offers, $10,000 for the minimum size. It allows the retail investors who couldn't play in such a space come in and participate at the auction. Our view is that with the auction ending today, that this offer would be fully subscribed and even oversubscribed at the end of the day. Thank you.
Yeah, so tell us about, we know that the federal government did set some condition requirements to ensure that there's sanity in the space of this bond. So something like for you to be able to participate, your dollar, which you would use, would have already been in your account before the announcement. All of those measures, how much of adherence was given in the process of this subscription?
Okay, for now, the way an auction works, people submit their bids, notifying the issuer of their interest in such an auction. We are at that stage currently. I believe that the federal government has stated the conditions, which is one, that the USD you'll be using should be in your account a month before the auction. I believe a good number of those will come into play, especially at the point of allotment. But at this point in time, it is mainly just an expression of interest by subscribers saying, okay, you have issued such a paper and I have interest in participating. at this auction and also owning these instruments. But at the point of allotment, I believe those conditions will be carefully scrutinized to ensure that that people adhere to the rules that have been kept even before the auction started.
So, the federal government had said they are set to get 500 million from this series. And some people are saying that it looks like it will be beyond or above that. What do you see?
Yes, as earlier mentioned, the flexibility which the auction offers allows retail investors who have not been able to play in such a space. If you recall, or if you follow the Eurobond space, you will know that to participate in a plain vanilla Eurobond auction, you will need a minimum of $200,000. And this auction allows those retail investors to come in and play. Not only that, it's also allowing those in diaspora to be a part of the auction. And the corporates are also not left behind because they can invest their excess funds or excess liquidity in an instrument that offers a little bit above what current papers in the market are doing. So with all this in view, we do expect that this auction, so to say, should be fully subscribed and even oversubscribed. If you look at the term sheets that have been shared, the maximum size or the size of the full issuance is about $2 million, but it had been put into tranches of $500 million, and this will be the first. I believe it's just also testing the market, but this would be fully and oversubscribed from where we sit. Thank you.
So that means we should expect like a second series or second tranche.
Yes, in no time. Yeah.
But an attractive security is more debt for the government. I wonder how you find a balance between that.
Yes, so it's an attractive security, yes, for the investors and also for the government. Looking at, we're in a position now where the view is to build our reserves, also improve FX flows in the market. The federal government has stated that this auction would be used for those dedicated projects or for those dedicated items that has been stated that they will be used for. So it's a win-win, if you ask me, both for the investors and even for the government, because the government can use it to ramp up our USD reserves and also be able to have enough war chest to support the economy and to balance the trade activities.
Yeah, after all, everything costs something. So if this is the price the government to pay, I guess.
Definitely.
All right, thank you so much, Nonso Ejiofor, fixed income dealer with Access Bank.
Thank you for having me.
Let's go to other markets now, starting from the United States. Stock futures climbed on Friday as investors prepare for a crucial inflation reading that's closely watched, not just in the United States, but all around the world. Let's look at the numbers right now. Dow Jones futures green 0.16%, mostly because of that expectation that the number is going to be friendly enough to push for a cut next month, an interest rate cut. So 41,510. S&P futures 0.38% at 5,632.25. Nasdaq 19,520.75. That's up even more than 0.5%, 0.64%. Now let's look some few hours before now with our correspondent in Washington, Maria Bird, as she gives us the closing numbers and sentiment for Thursday. All right, seems we are not able to get Maria, but the Feds are keeping a close eye on the metric, and it could obviously influence policymakers' rate decision next month. And although all the markets are also looking, let's go to Asia now. The markets there climbed on Friday, basically on the same reason. Economic data from the United States, that has come. Recessional fears have calmed down there, while investors are assessing a slew of data also from Japan. So we see the Nikkei in the green, 0.74%, 38,647.75. Kospi also in the green, 25,235.90. Hang Seng Index, more than 1%, gained even more, 1.14% at 17,989.40. 0.09. We see other markets also in Asia. If we could have those numbers, they have a Shanghai Composite green, as well as in Australia, it's green, 0.5. So that's positive sentiment and expectation of that rate cut is driving market. And also Japan, data obviously from Japan, is also contributing to that. The core inflation rate, which strips out cost of fresh food, went up at 2.8%, higher than expected. Unemployment in Japan also went up 2.7 in July. July retail sales in the country went up also 2.6 year on year, but lower than expected. And revised increase in June was at 3.8%. So those are the drivers of market in Asia at this time. Let's head to EU now and see that earlier this summer, Germany was a host to that giant football party as the Euro Cup was played out across the country. Now, Germany did not win, Spain did, but economists have tallied up some numbers to see if there was at least a financial win for the host. Lars Holter joins us now with the details. Lars, good afternoon.
Thanks for having me, Ini. Well, long story short, there is indeed a financial win for Germany. A study that just came out says that the tournament benefited Germany's economy to the tune of 7.4 billion euros. Some quick numbers: there were 2.7 million ticket holders watching the games live in 10 stadiums across the country, including here in Berlin, of course, but also in Munich, Hamburg, Frankfurt, Dortmund, and some other big cities. 44% of those ticket holders were from abroad, and all of them, of course, plus of course those who might have been German but from out of town, spent money on travel to and from the stadiums, on hotels, on food and beverages, on souvenirs, and that quickly adds up, say the economists who have crunched the numbers.
How reliable are these numbers, Lars?
You can, but only to a certain degree. Even economists have admitted beforehand that the exact financial impact of any large event like the Euro Cup can only really be guessed. And I want to point to one number in this report that illustrates that. The study says that Germany, and especially those 10 host cities, have received media exposure at an advertising value of 570 million euros. Now, how exactly do you measure that? By a TV airtime minutes, or by online clicks, by newspaper columns, or how do you value that? The study says that 97% of Eurocup visitors from abroad said they would come back to Germany for another visit. 79% said they would also recommend Germany as a tourist destination to their friends. But let's be honest here, Berlin and Munich, for example, are already packed with tourists because they're among the best cities in the world to visit. Whether it's the Brandenburg Gate and the museums in Berlin, or the Oktoberfest in Munich, whether it's the port and the musicals in Hamburg, these are cities that already have a lot of tourism. Also, despite the fact that the study says that all these visitors had a great impression of Germany, I do remember how there were also many traffic issues. There was trains and buses not running reliably, and a lot of annoyed tourists, actually. So I don't know how precisely you can possibly measure the future impact the tournaments had on Germany.
All right, Lars, I think I hear you bragging a bit there, naming all those tourist sites in your country, but good for you, right? At least you didn't lose it all. Well, let's head to the markets now and see what investors are doing today.
Well, first of all, German shares are trading at another record high going into this last trading day of the week. Other European markets are just as strong. Yesterday, some of their strength came thanks to inflation numbers that point towards the ECB further lowering their interest rates soon. Now we're waiting for similar data to come out of Washington. The Fed has already signaled that the rates could be lowered as early as next month. And if the latest data now supports latest trends, then we'll certainly see another push for U.S. markets too, and likely that would echo into Asian and European markets as far as into next week.
All right, Lars, thank you so much for that. Now let's head to the African continent, see what's happening there. Lots happening there at this time. The United States government says it is set to expand the Lobito Corridor, which is a railway project that runs from Angola to Zambia through the Democratic Republic of Congo, all the way to the Indian Ocean through Tanzania. The railway is expected to connect African countries to global markets and enhance regional trade and economic growth. The U.S. Acting Special Coordinator for the Partnership for Global Infrastructure and Investment, Helena Mazza, who was speaking with reporters, shared progress made on upgrading and extending the Lobito Corridor. Mazza, who just finished a week-long trip to DRC and Tanzania, said the trip focused on relaunching our partnership with the DRC and engaging with the Tanzanian government and private sector on next steps towards extending the economic corridor to the Indian Ocean. He emphasized that the corridor was never just being about building infrastructure, but about offering high-quality, sustainable infrastructure projects that deliver lasting economic growth. The United States government, with the support of the European Union, African financial institutions, and the governments of Angola, the DRC, and Zambia, is working to rebuild and revive the Benguela railway line that countries used to export materials and minerals even before independence. The number of business liquidations in South Africa economy decreased by 5% year-on-year in July 2024. This represents a decline of 7 liquidations, dropping from a total of 140 in July 2023 to 133 in July 2024. Of the 133 liquidations recorded in July 2024, 13 were compulsory liquidations, while 120 were voluntary liquidations. Principal Survey Statistician at Start SA, Onika Mushawana, explains more on this.
The 133 liquidations recorded in July 2024 include 13 compulsory liquidations and 120 voluntary liquidations. Broken down by the type of institution, 76 companies and 57 close corporations shut their doors in July 2024. The number of company closures decreased by 2 cases year-on-year. The number of liquidations by close corporations declined by 5 cases over the same period. In the first 7 months of 2024, the number of liquidations decreased by 5.3% compared to the first 7 months of 2023.
We head to Ethiopia now, where the government is encouraging Chinese investors to explore opportunities within the country's industrial parks and its first free trade zone. The appeal was made by the Chief Executive Officer of the Ethiopian Industrial Parks Limited Corporation and other senior Ethiopian officials during a recent investment promotion meeting. The CEO said that the Chinese investors currently constitute the largest group of foreign investors in the industrial parks managed by IPDC across Ethiopia, emphasizing the importance of attracting more Chinese manufacturing companies to the country's 13 industrial parks and the newly established Dire Dawa Free Trade Zone. Recently, the Ethiopian government invited Chinese electric vehicle manufacturers to explore opportunities for producing and assembling EVCs in the country. In Egypt, the country is planning to invest about 12 billion Egyptian pounds to establish its first green industrial complex in the industrial zone of New Alamein. This according to the chairman and chief executive officer of Integrated Environmental Technologies and Oil Services, Hazem Gaba. Mr. Gaba made this statement in a meeting with the Minister of Housing, Utilities and Urban Communities, Sherif El Shabini, the deputy chairman of the New Urban Communities Authority, Amin Shonaim, the head of Almain City Authority, Ahmed Ibrahim, and general manager of ATOS, Hassani El Mamalouk. During the meeting, they explained that the complex's first phase includes establishing 3 main factories and other supporting ones. Gaba added that the complex will span an area of 400,000 square meters and is expected to provide 2,000 direct job opportunities. Furthermore, it said production is expected to start in the second quarter of 2025 with a local component of around 60 to 70%. And still in Egypt, Morgan Stanley has provided a preview of the upcoming central bank policy decision in Egypt, highlighting a significant decline in inflation for the fifth consecutive month in July, reaching 25.7% year-on-year from 27.5% in June. This decrease was below both Morgan Stanley's forecast of 26.7% and that of Reuters' consensus of 26.6%. Despite this, the firm anticipates that the Central Bank of Egypt will maintain its current interest rates in the near term due to several factors. First of that is inflation is decreasing faster than expected, but it remains above the CBE's target range of 7.9% for the first quarter of 2024. Prime Minister has said that he expressed a goal to reduce inflation to below 10% by early 2026. The second reason is recent increase in government-controlled energy prices that has added uncertainty to short-term inflation forecast. There's also fuel prices, which rose approximately 15% at the end of July, followed by electricity prices increases by around 35% for consumers and 77% for industry at the end of August. Furthermore, under the flexible exchange rate system, which is a crucial aspect of the International Monetary Fund program, a tight monetary policy is necessary to maintain foreign investment in local currency assets and manage speculative foreign exchange demand by locals. Morgan Stanley has revised its inflation forecast to 23% for December 2024, and that's down from 26% after considering the lower than expected inflation in July and the recent slowdown in inflation trend. And the December 2025 forecast remains approximately 13% in the light of the government's plans to gradually eliminate expensive subsidies as part of fiscal adjustments. Let's take a short break now. When we come back, you do remember yesterday we had that story. Securities and Exchange Commission in Nigeria approved 2 cryptocurrency licenses. We had that story in the morning, but we'll discuss it after this break here in Business Incorporated. Stay with us. It's crypto time now. We look at the board and it's a sea of red. Mostly. We see Bitcoin has dropped further to $59,630.41, dropped 0.25% in the last hour. Ethereum joins also using some of those green color that it had, lost more than 1%, $2,519.72. BNB torn back in the red right there. And Cardano, Solana, there seems to be a red Friday. We'll talk about this, but I mean, there's some stories. I know the most interesting one, obviously, is that Securities and Exchange Commission in Nigeria today. But first, we see that KuCoin now requires proof of payment if you're still using KuCoin in Nigeria. And this is, they say, but it's not for Nigerian users. They said it's for the European market where users frequently mark orders as paid without actually making the payment. This is not Nigeria. They say now we require you to upload proof of payment of your payment before you can mark an order as paid. This measure helps prevent inconvenience for both the buyers and the sellers. They ask you to upload 1 to 2 images proving that you have indeed made the payment for the order and ensure that the proof of payment that you provide is valid. Otherwise, the platform reserves the right to cancel your order. This is a notification for KuCoin users, but more in Europe. So there you have it. And then, of course, the Nigerian story where the Securities and Exchange Commission has approved 2 licenses for cryptocurrency companies. We told you that story in the morning that they approved 2 crypto exchanges. That's Quidax and Busha under its Accelerated Regulatory Incubation Program. And this approval, in principle, gives them official status as crypto trading platforms in the country. In addition, the SEC has admitted 4 digital asset firms, Trovotech, Wrapped CBDC, Dream City Capital, and Housing Exchange, to test their technology under the regulatory incubation program. The capital market regulator says it is reviewing more applications for approval and emphasizes that these current approval are steps towards full registration, granting legal recognition to these platforms. Let's talk to Shehu Dania now. He's the Chief Executive Officer of Alpha Geek Technologies and joins us on the program. Hi, Shehu. Good afternoon.
Hi, good afternoon. Thank you for having me.
Yeah, well, I believe you're anticipating this conversation. But first, let's look at the market numbers. We see a sea of red. What's going on? What has changed the color? Ethereum that had managed to recover a bit is back in the red. What's going on in the market?
Well, people would always take profits. So whenever there's any significant rise in the prices, like we witnessed during the week, wasn't so much, but at least we saw maybe like a 5% growth in most of those currencies. People would always take profit. And then this weekend, some markets are closing. Let's also remember that it's close to the end of the month. The month ends tomorrow, which is a Saturday, and trading officially closes. So most institutional traders always close their positions at the end of every month. So it's something that I think is pretty much normal, except there's a major industry event which will trigger, increased prices.
But I thought countdown to the September interest rate cut will give a boost to the market, which is what is happening in, for instance, the stock markets in the United States and even in Asia.
Yeah, but because the crypto market is more volatile. So truth is, there are a lot of fundamentals that back the prices, but half the time, most of these other currencies are more speculative. So the operations are slightly different from the way people would, consider stock markets, which are backed by, big institutions.
All right.
However, there's still some significant difference. But yeah, it's more volatile and the losses are higher. So people definitely want to close their positions.
All right. So now let's come to the crux of the matter today, which is the Securities and Exchange Commission granting license to two companies right there. We saw this coming because the new SEC boss, Mr. Gama, has always been, expressing his positive sentiment towards the crypto market, towards green energy and all of that. But what does this mean to the issue of legality? Because we do know that it's not all the arms of government in the financial sector in the country that have recognized or given the nod to the existence and operations of crypto. So what does this mean for the crypto community in the country?
So the decision of the SEC really signals, it's the recognition of the potential of digital assets and the blockchain technology, to revolutionize the financial landscape. I'll say it's a step in the right direction, but this is what everybody in the industry has been clamoring for, so to create a regulated and secure environment, for the businesses to operate. But let's remember that, they've also taken, an initial step of creating the ARIP, which is sort of like a cohort program, which is regulated, where they, bring in a few of the players within the industry, observe how they do their business, and then they'll now further, that way they can then now extend and give more regulation towards the entire industry and be able to license more and know how they go about taxation, go about, reporting, know about, anti-money laundering laws and all of those kind of things. But yeah, all in all, it's a positive direction. It's a positive direction for the industry.
What does this mean for those two licensees that have been given this license? What does it mean for them? What can they do? At least we see they've been granted legal recognition and ahead of full registration. And what does it mean? What can they do and what can they not do at this time?
So the central bank, before this SEC, the central bank already, put out some kind of, when they withdrew the statements that actually banned financial institutions from providing banking services to digital assets exchanges, they also put in some guidelines, in terms of how people should be able to operate. They basically, of course, they would need to still submit something, get a letter of no objection from the banks. They also need to operate within a particular framework, which is part of what they are. So for them, of course, it signals good business for them. It means that they have a license and they are operating legally, as opposed to however it is that they might have been operating before now. It also signifies it's good for their investors. They also, they're able to raise capital, they're able to expand their operations. They're also able to confidently ensure that user funds are secure, are safe. However, they also need to understand that with regulation, they need to then start abiding by the laws that are clearly stipulated by the referees, which in this case is the Security and Exchange Commission, and also transport to the Central Bank, the NFIU, and other agencies that may be involved in doing this.
I wonder how long it will take for there to be a new entrance into this group that they have just 2 members now.
As they mentioned, they are processing quite a number of applications, because I believe that most of the exchanges that have been operating in the country before now have also put in applications for this approval in principle. I believe that from the statement that the SEC put out, they are considering all these applications, and then they'll definitely be releasing more, granting more approvals, on a case-by-case basis as soon as the people meet. Because there are processes in place. You still need to go through clearance, you need to go through, security checks. They need to do security and more. There needs to be a lot of risk analysis around the directors and sponsors of these companies. Basically, I believe that they are doing things. So I'm sure. But I believe maybe every month they'll probably be putting out or adding new entrants who meets the criteria that they have, put together into this cohort program.
So obviously this should be new investment line for some Nigerians.
Yes, definitely. To bring in more and more, to bring in more investments. People want to see. People have seen that, yes, Nigeria is an investable country because the government is able to take firm decision on what they want to do, They spelled it out clearly. There's regulation. This now allows different businesses to be able to come in and say, yes, we want to actually go and do business in Nigeria. So new investments will come in. We'll get new people who will invest in existing organizations. However, I think it's important for the nation to also. This also signs, it sends a good signal because these are local exchanges, right? They didn't actually just give out issue licenses to to international exchanges and then now make the local exchanges look bad, So the fact that the exchanges that have been granted licenses are local, it means that the government and the SEC are willing to abide by their words, So part of the requirements for these licenses are that the directors must reside in Nigeria. The major sponsors, the CEO especially, and most of all the C-suite officials, executives. Most of the executives must, reside in Nigeria. They need to have full operations, have an office, employ Nigerians, and all of those things. So yes, definitely, new investors will come in, invest in Nigerian businesses, and they will see the country can then reap the benefits of the digital assets ecosystem.
But I guess it still leaves windows for foreign investors, perhaps, who want to invest in these Nigerian businesses.
Oh, yes, definitely. So a lot of foreign investors will be able to come in, They will invest in local businesses because the local businesses definitely meet all the criteria that are required to, license and operate. So, it's a huge sign. Nigerians, the industry is going to open very, very wide. We'll be able to employ more people, be able to, spend more in all the different aspects. There'll be a lot that we're going to, but over the years since the CBN ban, a lot of the businesses operating have pretty much shut down. They've not been doing any marketing. They've not been doing any major events. But now that everything is going well, people will then be able to properly market on TV, radio, basically everywhere, and money will flow within the industry.
I wonder what else the crypto community can be expecting from the Accelerated Regulatory Incubation Program, apart from this, because this was done under that program.
So the community, basically, you see other people, there were some other businesses that were also given this approval in principle, for the regulatory incubation program. These are, businesses that are that will be testing out distributed ledger technology, basically blockchain technology solutions. So if you see maybe like a business like the RAP CBDC Limited, which is, promoting a stable coin, which is going to be backed by Nigeria, the Nigerian for to be backed by each naira, by the naira, which means it's going to be 1 naira for 1 CNG, and this way people are going to be able to transact using naira on the blockchain, exchange between different currencies, transmit between each other. Basically, it's like putting naira on steroids. Some of the things that the e-naira couldn't do, I believe that the CNG and will be able to do. And some of the other people who are doing, like there's a company they're also doing tokenization, who will start to see the benefits of blockchain technology generally, not just the financial parts, which is trading and trying to make profits, which it seems to be what everybody focuses on. This opens up the entire economy to the benefits of blockchain technology, and we will begin to see significant impact towards our elections, in supply chain, and several industries that could benefit from blockchain technology generally.
Do you see this swaying the CBN perhaps in a short time, and those are negative whenever the naira has deep fall? The people look the way of cryptocurrency. Do you see it swaying the CBN and changing some of those sentiments?
The CBN has particularly said that they do not or will not be regulating, digital assets. That's why they have transferred. They set their guidelines. They've made it clear that their responsibility is the financial institutions. However, anybody that wants to transact with the financial institutions needs to abide by certain rules, and they put out those rules. And the SEC and the SEC, of course, then went ahead, issued regulation, and I believe that in the cohort program that they've designed, they'll be working on ensuring that the institutions who are partaking in the financial part, which are the digital assets exchanges, they would definitely have to abide by the rules that are set by the central bank and other agencies.
All right. Thank you so much, Daniel, for your time and your perspective. Of course, we hope to see some action in the crypto community following this. And as you said...
Oh, definitely there will be. There's excitement everywhere.
Yeah, I feel it. too. Thank you so much. And do enjoy your weekend.
Thank you very much for having me. Have a great day.
All right, so that's it on the program for the week. Thank you so much for being a part of it. We really do appreciate your presence. Without you, there'll be no us here. And we do hope it was worth your time. We hope to do better. In any way we haven't done so good, we'll try to do it better next week. I'm Ini John Mekwa. Do remember that Will Ibong will be back here 7 p.m. tomorrow for Capital Market. She'll be giving you a round summary of what has been going on in the market for the week. And you might even get some investment tips. I'm Ini John Mekwa. I'll see you at 10 p.m.